Good morning. Welcome to Risk Neutral Trading. This is my virtual trading journal. I stream every trading day of the futures market from 8 o'clock in the morning until 1500 in the afternoon, which is the complete cash session. That's 7 hours. Lately, I've been, just this week, I've started a Globex and Asia Open stream to explore whether there's any opportunities there for my trading. That starts at 1700 Central Standard Time until about 2000. I will see if that continues or not. I don't know, but let's get on with it here. This is Risk Neutral Trading. This is my virtual trading journal. Everything that I see on my screens is captured here in the video. That's Bookmap. This is IRT. And my voiceover provides insight as to what I was thinking at the moment. Now, I do not intend or am not licensed to provide trade or financial advice, so that's not the purpose here. And there's a disclaimer in the description. Please read that. Having said both of those things, this is my virtual trading journal. And I only trade vetted, statistically verified setups that have a pre-positive expectancy. So if I'm watching the market and a setup starts to materialize and I get a trigger, I enter the trade and I manage the trade live in real time here in Bookmap. But it's not intended for trader financial advice, for entertainment, comedy, relief, whatever you want to call it. So here we are, Bookmap, and this is the opening print of the Globex overnight session. We had this big pull down here, which is interestingly just down exactly to the POC from previous, and then we're flat all night, and here we have this little one down here. This is IRT, which is my basic charting package. So let's start with the numbers out today. And here's what we have so far. We had the non-farm employment change release, and we've got the S&P 500, S&P PMI, and the ISM PMI and manufacturing prices out at the top of the next hour, 9 o'clock. This is investing.com. It's my original news source. They focus on traditional economic numbers and calendar events. This news source, as both of them, Financial Juice and investing.com, you can filter for wherever you are, whatever reports you're interested in. And that's right there. One thing to note about investing.com is that they only focus on traditional events, PMI, non-farm payroll, Fed rate, GDP, those things. And if you notice that each one of the event headings turns to a URL if you hover over it. For example, if you don't know what ADP non-farm payroll is, you can click the link, see the recent releases, and find out the information about who puts it out and what that report's about. That's pretty handy. Also have various options here. We can search, see what events are coming out next week, etc. And we have an earnings calendar. We are still in earnings season, but it's almost wound down, so I'm not going to bother looking at it right now. The other news source is Financial Juice, and ironically, I have it up primarily for the opposite reasons as investing.com. They have a similar calendar on this side, and they do pull non-economic events into this calendar through the day. Not all of them, but a lot of them. And the events that are recognized to have a high potential risk to our auction. For example, Trump is going to have something to say, or a signing event, or Dissent might be going to say something. Not no political content here or political comment, but it's a fact that the I mean, I hope it's a fact that you recognize at this point that if one of those, specifically Trump, gets in front of a microphone or even on Truth Social, it can have a dramatic impact on our market. Whether it can go, the price can go up, the price can go down. That's a dramatic impact. But as traders today, our first and foremost mission is to protect our accounts. The fundamental way that you do that is to manage risk. If you don't know about risk, you can't manage it. So I really appreciate that in Financial Juice. Again, not a political comment. It's a fact. It's a risk. It's a risk event. And on the right side over here is more of a squawk box where they, put in a running commentary. And if something is, I don't see one here yet this morning. There you go. There's, some red things if it's got potential market moving potential, I should say. So that's where we are for the news. Let's take a look now at the pre-market. Well, this is yesterday's RTH session, and here we are in the ETH. Right over the top, right? Value is overlapping. Really unchanged. This, so far, is an inside bar because the low and high of the overnight is within the range of yesterday. Just noticing that. This is Investor RT, which is my charting package. A couple of things here. If you notice, the header of each chart has the instrument, the chart type, the periodicity, and the session. So you can always look at them if I haven't said anything or if you're curious. Also, I try to have a watermark behind some of these. This is the micro ES, the micro NQ. This is the micro ES, my high time frame chart. And this is market profile. I don't change market profile back and forth from micro to mini. I do change from full session to RTH, but not micro to mini. And I have a similar tab for the minis right here. So let's start at the higher time frame, right, and work from the top down. This is the MES daily chart RTH session. What does that mean? Well, each one of these candles is one full RTH session. There was yesterday, Monday, Friday, Thursday. See? Wherever price overlaps, I continue this volume profile around them, and that constitutes the micro composite. It generates a micro composite VPOC, volume point of control, which is this yellow line here, and these high and low volume nodes, which are represented by these red and green lines, and those values push automatically to Bookmap. The POC I manually push across, and the session prices push automatically to Bookmap. Let's see what we're doing for volume while we're here. Yeah, that's about right. This is 1.25 points per 1 minute ATR, and we're at 76% average volume for this time of day, looking back 20 trading sessions. All right, Bookmap. Now, this is the micro composite column where I manually enter these values, all-time high, the POC, etc. And these are the high and low volume nodes, which push automatically from IRT to Bookmap. This is the full session volume profile. Full session volume profile. This started plotting at 1700 last night, and will continue until 1600 this afternoon. This is the full session or Globex. This is not the ETH. These are the RTH volume profile and delta profile that reset this morning at 8:30. My statistics column, session prices, which push from IRT, and these I don't have a dome here on the chart side anymore because it was taking up too much space. But this is the most important column from the dome if you don't trade with it. And that is the resting liquidity at every price. And these are the prices. The heat map, you'll notice that I don't have indicators on either Bookmap or IRT. I believe in keep it simple, stupid, very definitely. I only use price, volume, probabilities. Now I have a POC for the full session and a POC for the RTH session. Nothing about anything on these charts is complicated, believe me. The POC is nothing more than the point, or the price, I should say, at which the most contracts have traded so far in the session. So far, 4,847 contracts have traded at 76.21 quarter or 76.21, and that's the POC. The minute one of these other prices trades one more contract than that total, this line will move there. There's a VWAP for Globex and RTH. That's volume weighted average price, and there's a mid. The other lines that are here are just extensions of these price levels. This is the initial balance high, initial balance low, previous open, ETH open, ETH low, I'm sorry, etc. Now, the initial balance high and low sometimes confuse people because of the naming, I suppose, comes from the market profile world. But it stands for initial balance, and all these two values actually represent are the high and the low of the first 1 hour of the RTH trading session. Nothing more. So let's move on to the statistics, which is important to me. The first thing that I need to do is determine the statistical open type for the day. And that's easy because it only has two criteria. If we opened right here, right now, this is current price, how would that price compare to the previous RTH close? Well, that's right here, if I'm not mistaken, yes. So it's lower than the close. How would that price compare to the previous RTH range? Well, there's the high and there's the low. So it is lower in range. So this needs to be left alone because it is exactly what we had yesterday. Normally, if it changes, I would change it here. I always keep the title of this column current for the day. That way, when I look at a screen snap or the stream, however long ago, I can look at the title there and know exactly the relationship of the overnight, so I don't have to think about it much. Next, we're going to remove the statistics from yesterday and get the ones for today. That makes good sense, doesn't it? Okay, now the statistics come from the statistics study in IRT, and you notice that yesterday was lower in range also. So the way this works is very simple. The system looks back at the most recent 1,799 trading days. Of those days, we traded lower in range 524 of them. We opened lower in range 24 of them. And of these days, price revisited the overnight mid 82.1% of the time. Overnight mid 82.1. Boop. That's all there is to it. That's as tough as this gets. Now, I'm just going to go down the list. The next one is the overnight volume point of control at 81.1. And that's right here. And the next suspect is the previous close at 73.7. We know that's right there. The IB high is 69.1. And be sure and I always put the initials, because when we open, this price is going to come right down to the top of the current price, and the low will come up below to the low of the current auction for the first 1 hour. It'll no longer be at this level, or pretty unlikely. So I want to know what was there. Previous high, I don't know what else we got here. Previous POC is 67.4. That's this guy right here. Didn't get the P in there properly. P. Okay. Again, because that's going to change the minute we start trading. IB low. Where's the overnight high and the overnight low? I want to see those boys. Overnight low is 65.5. That's right here. And the overnight high went somewhere, I'm pretty sure of that. That's 51.7. Well, that's right kind of under there. So 51.7. That's kind of a touchy one for the, actually the close can move up here a little bit, I think. One tick. Previous highs, 41.6. And the previous low is 53.2. Now remember, these are probabilities based on a 1,799-day look back, where these levels were revisited by price in the RTH session. That's how it works. They're not hard, fast lines in the sand. You know, don't bet the college fund. They are suggestions, targets, to give you some sense of what the auction is doing and what it's accomplishing. All right. Now, for some reason, I'm kind of early, which is a little spooky, because usually I'm always behind the curve here. So that's great. Let's continue on with Bookmap. Now, in order to trade with Bookmap, you need to activate the trade control panel. And in this case, it is, you select an account and you select the number of contracts and you close that off. And then I need to go over here and make sure that I have the right, where'd it go? The right trading statistics selected, which is there. I need to make sure that I've got the multi-account trading going on. Now, this is still set up because this system has been running since 1700 last night, so it's still set up. Why I'm using these Lucid accounts rather than my AMP live account, the only way I could de-risk from too many micros and still have meaningful, trading ability, was to do it this way with these evaluations, which, and there are some pretty phenomenal changes in the prop world that I was not even aware of. Unfortunately, for someone, Neiman recommended that I take a look at them, and it's very, very great opportunity for me to de-risk and still be able to trade fully with some meaningful potential for payout. And then once the trades are vetted again with the new trade management system of hedging, back to the live account with AMP, and away we go. So the next thing I need to do in that regard is I need to make sure that I've got the hedge side of life set up, which is over here, and that's a one lot, and that's that, and that's the correct account, and that's okay. Boop. Until I was tired last night. We're strange days we're having here. I've added this new evening account. My daughter's needed to go. We've had to go do a 3-mile, 4-mile walk every day, and I had to get up. You're up at 4:30 to get her off to something this morning by 6. So I'm on the desk here 12 hours minimum, and then to have these other things associated is kind of a lot. Okay, so let's see what I'm forgetting now. We've got the ability to trade set up. We've got IRT and Bookmap going. This is seeming pretty incredible here. I don't know how I'm doing this, but good for me. So we now have the Traders Lab nap, which is something I need to do every day at about 8:20. And what are you doing? That is this. I'll do here in a minute. I'll show you. The Traders Lab is a Bookmap Discord chat room called the Traders Lab. And it is obviously it is a Discord chat room, sponsored or supplied by Bookmap, but led by a guy named Tom B. And you're never solicited for anything there, including subscribing to Bookmap, which is pretty amazing considering they're paying for it. But this is the snap that I post in there every day at about 8:20. In the mornings early. This morning it was, 4:30 or something. Usually it's around 6. I post the reports for the day. This is an effort to just be able to provide a little assistance for any of the folks over there that don't have this kind of charting with all these numbers available to them. Now, the Bookmap, the TLab in it of itself is a Discord chat room. It's not live trading, nor is it trade calling. It's a place where Tom shares philosophies and other people, a lot of people pitch in. There's quite an active Discord room. I guess it's called a room. A lot of, opinions and commentary and a lot of good people. So Tom's been a professional trader, he started as a professional trader and he's been trading for 48 years. So there's a lot of good common sense in there. And every day I put those 2 snaps in as kind of a endorsement, or words of encouragement or thank you or whatever. I used to be quite active in there, but then I took Tom's advice and ended up with this stream because his advice was, well, focus on your market, narrate what price is doing for your market and trade it. And I took that the next step to mean, well, so yucking it up in a Discord room is probably not a good idea. I'm going to do this. And we have a live conversation here about trading, so that's good. And I also trade live, so that's, I think, also good. Okay, we're going to open here in 6 minutes. I can't believe that I have that all done. I'm trying to remember see what that is I forgot to say. If there's something, excuse me. Maybe getting up at 4:30 in the morning gets me going quicker. I don't know. Beats the hell out of me. It is 8:24, isn't it? Yeah. Yeah, so these are pretty crazy times here. I'm in on my side of the desk, so we'll see how this all plays out. Haven't had any trade opportunities in either the Globex or the Asian opening ranges yet that were meaningful within the time frame, so that may not be a continuing thing. We'll see what happens. But I have a commitment to take no trades off the stream ever. So that's the reason for that evening stream. In case I see an opportunity and take a trade, then it fulfills my commitment and it is captured within that particular stream. The reason I do that is for accountability and transparency. I don't script this, so if I forgot to say something or do something, oops. Excuse me. We're going to open here at the bottom of the hour, and these two columns will reset, hopefully, as they're supposed to, and that's a good thing. We've got the TLab snap in. We had the new snap early. I've gone over the reports. I've gone over the pre-market. What I would expect, just as we're standing here, look at these days. This is yesterday's RTH, and this is the ETH overnight. What do you expect is going to happen? Inventory is about 100% short here. There's our close, and we've traded all night below it. I would expect that we're going to have some responsive buying to take profit. And then looking at where this profile is building on top of the previous ones, I think we're probably going to have another open auction. The world is kind of on hold, I think, over the obvious geopolitical stuff. And that, as I said in the pre-market with the news, that is the preeminent 500-pound risk monkey in the corner. Always have your positions bracketed, and that's the best you can do, and watch and see who's talking, who's reporting what's coming out, because those moves are severe, can be. So the only thing we can do, we have to put risk on in order to take a trade, but you have to be minimize that risk as much as possible. That's why I go through all these pains of data analysis and statistically vetting the trades to have, or setups to have, a positive expectancy. So, okay, let's see what we've got in the meantime here. Volume, we've already taken a look at that. This is my edgeful. This will be kicking in here pretty quick, for this is an edgeful based probability percentage based opening range trade, or initial balance trade. Can't even talk. This is my old original standby. And at 9:30, these zones will start to plot. I don't know. I'm standing here. I don't know what it is, I forgot, but it had to be something, because I never have this much time to reflect and talk about it here. One thing before we do open, look at this. Now, this happened during my Globex watch, right? And I'm going, what the hell is that? Well, I rolled back and look at exactly where that came. And almost again this morning, to the original POC for yesterday's RTH session before they took off with the news. So pretty, open, flat, boom, boom, in a matter of seconds, and then flat the rest of the night. Isn't that amazing? Liquidity is king, isn't it? So we're going to open in about 30 seconds here. I'll stop jabbering, and let's see what happens. Let's get ready to rumble, boys and girls. Again, if whatever, welcome to the stream, Risk Neutral Trading. Yeah, here we are. It's a Wednesday. Hump day, baby. Well, there we go. So here's where we pulled back. You see that IB high is up here. It'll now migrate down here. IB low will move up here. And away we go. I'm going to change my IRT charting now from full session to the RTH session. Assuming it's going to get its shit together. Well, now it's not responding, so that's a lot of fun. RTH, okay. Then there's our plot. Now this is previous RTH, current RTH, because I've just changed the charting from full session. And I do that every day to maintain the relationship. God damn it. Sorry. Maintain the relationship of the session prices. Only a couple of them, but value area high and previous. Now, you can see where we traded yesterday, big P-shaped profile, which indicates short covering, and here we are down here. Now, this is all RTH only. Here's our open. There's our POC, MCVPOC. And let's jump over here and get these things lined out for the boys and girls who are using the minis. Well, okay. I'm a little bit amazed at how this is working much more smoothly. There's got to be a reduced volume. About normal. Okay. All right, so there we are. This is the RTH session. These are the values. We're plotting. And we're walking, and we're walking. And here we are at Bookmap. Now, Blue Boy here, you notice this top secret NASA developed NSA indicator? It is a vertical line. And I put that bad boy on the first print of every session. So let's open this up a little bit. And we'll see where the first print of this session is, which is about there. And I want to be sure and keep out of this active data column with my mouse, because that's how you put trades on you didn't expect. Vertical line. That is, shall we say, the first print of the session. Now, the purpose of that is I feel it very important to have a firm understanding of the context within each session. So this is always live current market, this column. If I glance left and see Blue Boy over here, now this is the overnight so far, okay, the ETH. If I glance left and see this, I know without any question that I have the opening print of the ETH, and here's the live market. I know exactly what the context was for the full session. And that's what goes on with this boy. So that's the thinking behind it. I used to do a complicated VWAP migration system here in this column, and I realized it was stupid because it didn't give me here's a bunch of yellow lines saying VPOC migration. Well, so what? I wasn't clever enough when I started that to put a number sequence on them. Here's the first one, here's the second one, here's the third one, right? Which would have at least given me some sort of a context, but this is it. Oh, picture's worth 1,000 words or something, isn't it? Hot chick's worth 1,000 something. I don't know. I won't go there anymore. Never mind. Morning, Antonio. Bon dia. What a crazy. My world is getting goofier by the day, my brother. I'm going to come live in your garage or something. Camp out in your backyard, something. Up this morning at 4:30 to get Tam up and off to her new adventure. now that I'm doing this Globex stream every night, starting at 1700 my time through 2000 for the Globex opening range and the Asian opening range, I'm standing on the desk here 20 hours, I noticed last night. And then up at 4:30 this morning to get TAM going. So I thought life was supposed to get easy when you got to be an old man. What is this crap? Huh? Jesus. Fofo. Ajude-me. Por favor. Faz favor. Yeah, but it's what keeps you going. And in the middle of all that, after 3, when the before the cutoff after 3, because of something else she's got going on now, we go out and pull 3 to 4 miles, walking, not running, because I can't do that much anymore. In the afternoon, and and it's only 91 or 2 degrees, or say 32 or 33, so that helps, I got a full dance card now, I'll tell you. I'm not sure whether I'll continue this Globex in Asia stream or not, but I wanted to live stream it in advance so that I could maintain my commitment to take no trades off the stream in case I see these opportunities there. Then I could do it. So now you know everything I know. And maybe all of that is crap and nobody cares, but I do. So, that commitment is pretty, is important to me because of I think I've said it before here in the stream, but I used to, when I was in Kuala Lumpur, the timing was perfect, right? The market opened this exact time in the morning of the New York or the Chicago Open was 21:30 at night. Uh-huh. So I could have my whole day to exercise and do everything. And every morning early, I used to do a pretty strenuous, I'd do about 4,000 steps in our building. And I would listen to a futures guy named Trades by Matt. And I think he's still doing very well. I think he ended up going to the dark side and being like some sort of a pimp for Apex or something like that. But anyway, pretty funny guy. And he just had a short stream, about an hour and a half or something like that. But I used to always laugh because very, very frequently he'd be down $3,000 or $4,000. He was just a completely discretionary, seat of the pants trading guy. And he'd be down several $1,000s. And then miraculously the next morning, he had always gotten back on the system in the afternoon after the stream and made all that money back, right? So I thought to myself, if I ever did that, I would never take trades that were not live and captured. And that's where my commitment to only trading live, only taking live trades on the stream developed. Meaningless, I know, but funny how things like that get rooted. And we're talking years ago, almost 10. Well, not that far, but at least 7, 8. God damn, almost 10. I can't believe we've been over here this long. Whew. Incredible. Yeah. So here we are, boys and girls. There's our open. We're putting in our initial balance. It's starting to form. We'll get the data up here pretty quick and see what that all looks like. If the session today will be any indication of the session yesterday and overnight, it's going to be just overlapping and rotation. We'll see. We will see. I was going to do something else here. Anybody that's lurking out there, welcome. Just drop something in the stream and say hi. Where are you? This is meaningful. This is the stupidest thing I've ever seen, whatever it is. Antonio certainly knows that this is not in any way intended as a my way or the highway environment. This is me showing with full transparency, as best I can, exactly what I'm doing and thinking. That's the whole methodology of the stream is I can't multitask. So everything I'm watching through the day is captured here on my video, and my voiceover provides insight as to what I was thinking at that moment. And I only take trades here on the stream, live and recorded for everybody to see. The idea is this is what I'm doing at the moment. Any suggestions, oh, I do this and it works really good, I'm all ears. This is certainly not some sort of a me talking down or me trying to, I'm not even going to mention those 15 Ferraris I've got in the garage. I'm not even going to mention that. I have one Toyota Highlander, and that's the truth. I do have a Rolex, though. I have a Rolex Submariner that I bought new. Drum roll, please. $750. Little Switzerland in St. Thomas, U.S. Virgin Islands. Now you can get out your Rolex calendar and figure out how long ago it was that happened. There you go. That's as fancy as I get right there. Every time I put that thing on, I just shake my head. No watch ought to cost $10,000. I think that's what they cost nowadays. Something ridiculous like that. How crazy has this world become, But, I guess a salary for a upper level kind of managers are, they're all $500,000 now, I guess. I'm certainly not there, but it's amazing to me what's happened to the world and the economy. We're trading lower here. We are taking out our little values one after the other. To be honest with you, we've only taken out 2 of them, including the overnight low and whatever this guy was, the initial balance high. See why I put those initials on there? So I can tell what the hell that was at that spot. Clever, huh? Maybe not. Probably going to go down and tag out the previous low, I suppose. Gotten the overnight low so far. It's really astounding, whatever kind of charting you use. If you can plot some sort of liquidity, even if it's not a heat map, you can get some lines off your dome. It's amazing these last, or at least it seems to me that these last few days or weeks, we've been really precisely targeting these liquidities areas. I think I've tried to mention them as I see them, oh, look down there, or look up there, I'll bet money we tag that one out, and sure as the world we do. So let's have a look at IRT. Now next, I got to open this up a little so it keeps plotting. Okay. Well, I've got this chapter marker thing all screwed up today. I don't function well on little sleep. Well, I hope somebody was confident enough to take a short off that swing high. I certainly was not, because it's not part of the deal, but that's working out pretty snazzy, isn't it? What have we got here? Meta, Alphabet, bip. Well, Trump must have a sore finger or something. This place is not all red with Truth Social stuff yet. Oh, did I just lie to myself? No, the S&P PMI is out at 9 o'clock here, so I'm not sure why it's out at 8:45. I guess maybe I got my times off. Maybe it is 8:45 rather than 9. I guess. Something. No, it's still supposed to be... oh, no. Yes, you're right. Yes, I'm right. No, I'm wrong. Let's start over. S&Ps are out at 8:45, and the ISMs are out at the top of the hour. I apologize. I'm a groggy doggy this morning. Well, are we on 5 minutes yet? No, we're still on 15 down here. Let's get them open to 5 and have a look at what's going on. I'm talking about the down here, the timeline. So, Globex, VWAP, RTH, mid, POCs. The more muted yellow is the full session, which is over here. And this is the RTH. IB low and Globex low so far. And the IB high up here at the Globex VWAP. This is not right. Should be right there. As near as I can figure out some of these discrepancies, these start calculating based on when Bookmap figures the time, and there seems to be some difference between what Bookmap is interpreting my system time to be. I give up. I have IRT set up. I have Rhythmic set up in admin mode, so that it automatically updates the system clock to the Rhythmic server every 2 minutes. I figured that must be enough. So we're selling down. They're going to go after these 80s down here. Pretty obviously. Mark my words. I'll get my pointy wizard hat out here in a minute and start predicting stuff. There you go. See there? Who was that masked man? Bam. Bam. Well, I'm going to water up here. I'll be right back. All right. I think everything is just motoring along fine. Again, with the giant delay or lag on NMQ. What is this all about? In the quote page. I think I'm going to remove that from the quote page. I don't, you notice there's a 6 lag. The time is the same. Volume. Back over here. Now it's straightened itself out. A minute ago, this was 20 seconds. This was way behind. So let's look at my data, trading data, initial balance stuff. Okay. Well, just briefly, I have always done my statistics development and analysis here in IRT by coding up a system like this, which is the initial balance, high and low, continuation or failure. And then setting up the back tests and running them and capturing all the data. And I've done a lot of that. And I can prove it. Each one of these is a full back test. This is over 595 days, 1,012 trades, winners, average winner, losers, average loser, and it calculates all of the metrics: win rate, loss rate, expectancy, R factor, risk reward, profit factor, MFE, MAE, consistent, consecutive winners, losers, sharp, whatever. And every one of these lines is a back test based on various configurations and strategies. Well, that's the way to do it properly. But my problem is, it takes me, what's going on now? I'm not a code guy, or, it takes me a long time to figure this out and have it be something that I had confidence in. And I still don't have enough confidence in these setups to have them trade live. I'm fine with backtesting here in the environment. This will push trades today in this current active data with current rhythmic data, but any trades that it takes will be in the simulated IRT environment. Same way right here. This is the forming initial balance trade based on statistics, percentages of the range, breakout and a pullback trigger, and then there you go. And this is the code that would do that. Now since I developed the initial balance, the original one, I am able to take pieces out of it to try to put something together like this and backtest them and come up with values for that in that spreadsheet. But the new idea and the new thing, I want to stress the fact that I'm not interested in becoming the world's best IRT coder, because I don't think that's something that's going to happen. I wouldn't mind, but I don't think it's going to happen. And something that I can do short period of time, expeditiously, right? I'm interested in identifying the statistical edge or not of a setup. I'm not interested in being Mr. Code Guy. So what I'm doing is I'm starting to lean more and more on Edgeful, which is a real thorough data analysis environment, but that I can do more, quickly, and I'll show you what I mean. First, let's look at what's in play. That's how they start their day. And there was a gap fill by a weekday and gap is where in the real trading world, which I was incorrect for a long time, gap is the RTH close, which happens to be right behind there. See that? Gap is from the close to the open. To the open. So this would be the gap. We have yet to close this gap. Inside or outside range is previous higher low, previous RTH session higher low compared to where we open. So the gap means then that we have not closed the gap because the previous close is right up there, right here somewhere, right there, and the open is right there, and we haven't traded there yet, so we have not closed that gap. It says there's an 80% probability that we will, based on this, on the data. So these are forming. I don't use the screener much. That's something else. These are a bunch of tickers and how they are forming or not, and the bias for the gap fill, the opening range breakout, or the initial balance. And I can change these things that I want the screener to look for, and I can add or remove tickers. This is kind of the setup that comes from Andre. Let's get to the reports, which is kind of pretty much where we're starting out. So we haven't closed the gap, and I'm not going to look at the gap because it doesn't do me a lot of good. But the first thing to look at is the opening, is for me to figure out what I'm doing. The opening candle configuration, and I've got to make a template for this so that it's up here and I can just grab it every time. And I'll explain why. You'll see now that I need to change the damned instrument. And I want to make sure that the customization is right. Okay, so this is the opening candle configuration, and let me just save this as a new template right now. Okay, that's got to be good enough. These are probably okay. Boop. All right, now I got that over here if I want to have it. I thought I already had done that. Sorry about that. Anyway, so now I have this, and this is looking back 6 months. Standard report. What does this mean really? Well, the best way to look at it, I guess we can look at the little graphic that they provide down here. Disregard this text because this is not a 30-minute candle, and I don't use 30-minute candles. If this is the open and this is the closing candle of whatever the initial balance or opening range you want to use. In my case, I have it set for the same 1 hour as the initial balance. If the open is lower than the closing price of that last candle at the end of 1 hour, it's green. If it's the other way around, it's red. Pretty basic, huh? Basic thing, but got some data behind it, quite a bit of data behind it. And on best looked at in TradingView, here is that candle. And so what's happened? Well, there's the open. And so far, there's the close. Now, it hasn't been 1 hour, but at this point, that's the opening continuation candle developing. Another thing that's important while we're looking at this, the IB high was formed first, and here's the IB low. There's the first candle of the trade, and here we came down here and put in the low, and now we're back over here. Now, this could change within 1 hour. If price trades up and takes out a new initial balance high, all of a sudden it's a 180. The low formed first and the high formed second, and that affects the statistics. Okay, we'll come back to that later. First and foremost is the opening candle and that opening bias. So that's what's going on here. What does that say? Well, it says that these are the continuation probabilities of a normal day. If it's a green candle, in other words, it opened lower than it closes in the first 1 hour, or however long you have that period set, there's a 77% probability we'll have a green day, and vice versa for red. And here are the stats, looking back on the MES over 6 months. And there's not much customization on this. You can change that. No. Yeah, this is 1 hour. That's the only thing you can change as far as customization on this opening candle or opening configuration. Continuation, let me put it that way. So we know where we are there. That will set the bias, long or short, for these other reports. Now let's go to, if I've got this figured out finally ever, maybe. Let's go to the initial balance breakout trades, and we'll just do the IBCs. So hopefully I've got this working. MES, 6 months, standard report, initial balance, 1 hour, 60 minutes right there, huh? And by wick. This is important. How the candle determines the level is important. If you have it set, you can set this to close. I have them all on wick, and I do that for a reason. If you have it set on the close, the candle time, 5 minutes, 1 minute, 30 minutes, can make a huge difference in the probability and the data, because it needs to close above there. If you have the wick, meaning the high or the low rather than the open or the close, then your candlestick setting right here, candle time frame, is pretty much immaterial, because it's going to be the high or the low. So that can't trip you up. Can't trip me up. So today, well, not today. Let's start from the top down. We have here is the time zone. It's New York cash market. We can set it. I can set it to the Chicago. But I'm leaving this as it comes for now. I did create a new time frame. I created several, actually, to do with Globex and stuff. And here's Chicago RTH. This is from 8:30 to 1600. That includes the extended period after the cash close. So I'm just looking at and there is quite a bit of discrepancy with that last 45 minutes there, because oftentimes the closing swing trade will put in say take out a high, and you'll get both out rather than just one. So I'm leaving it in New York for now. There is a 74.8% probability we'll have a single breakout. High or low, doesn't matter. 22% will take both IB high and IB low, and at 2.36% we won't take either. Now comes the interesting part. Let's do this by day. You'll be surprised at how this happens. Wednesday, there's an 80% probability. There's a 3.5% probability we'll take none, and this has come down to a 15% probability that we will take both. Wednesday, watch this. Monday, Tuesday, be careful. Drops all the way down to 61%, 38%, no inside day. Tuesday is really weird. Wednesday, there's Thursday again, and Friday. Look at Friday. Let's stick with Wednesday. That's where we are. So you understand how to interpret those. Now comes the next level, which I find really interesting, and that is I guess I could be using these things over here. By rejection. What does this mean? Well, remember when I said notice I keep going to TradingView, but what the hell? Notice that the IB high formed first so far. That's important because the data suggests, or the data shows, that the opposite bar, or the level which forms last, is very definitely most prone to be exceeded or broken. So if the high forms first, the definite probability is that the low will be taken out first. Now remember, this is not, the IB is not finished, so we don't know which formed first or second, but that's how it works. Assuming it's a 60-minute IB and it forms first, where we are so far at this moment right now, we've got a 24% probability the high will be breached first, and 72% probability that the low will be breached first. And these are all days. Now let's get back to our day story, and let's look at Wednesday. Oh, look here. Only 8% probability will take the high, and an 83% probability will breach the low. If it flips on its head, it's going to go the other way around over there if it flips. Now, the next thing that'll come into play is the ending zone, and that can have an even more dramatic effect on the data than this one did. We'll look at that in a minute. How that works is, this is my version of these zones are accurate. These, the IB high, 25, 50, 25, IB low. Depending on, now here we are, here's the high, so the IB high was put in first, the IB low, so our candle would be going like that. So the expectation at this moment, if this was the end of the initial balance, is that we'd have an 83% probability we take out the IB low first, that it would be broken, and only, what it was at 8% that it would be the IB high. Now, the closing zone weightings are really pretty dramatic also, and they are calculated like this. If the IB high was put in first, the zones would be 0 to 25, 25 to 50, 50 to 75, 75 to 100. If the IB low turns out to be the first one, it flips the other way around. 0 to 25, 25 to 50, 50 to 75, 75 to 100. How that is determined is the closing price of the last candle in whatever time period you're using. In my case, it's the initial balance, 1 hour. So the closing price of the last candle of the first 1 hour will determine the closing zone, where it is located. If we close right here, right now, it would be in the 25 to 50, right? Oh, I'm sorry, it would be the other way around. It would be in the 50 to 75% zone, because we put the IB high in first. If it's easier to visualize over here. Okay, pretend this is the close of the opening balance. There's the first level to put in. So it's 0 to 25, 25 to 50, 50 to 75, 75 to 100. That's how it works. And then you can do something, if I can figure out how to get there quickly. Here we go. That's put in here, and it's done with the customization. And if you don't believe me, you see that the text says exactly what I just got through explaining, or I hope that I made clear. And this is where we would choose. So let's pretend that we've closed the IB. The closing candle is in the range we just watched, which was 50 to 74%. Okay, first of all, look at the statistics. 8, 83, 14, 85. Let's look at this. $50.50, 0, 100. Acts completely the opposite way. The IB low will be broken first. Now, that's if the IB low was formed first. In this case, the IB high is still formed first. It's a 50-50 flip which way we're going to go. Big difference in the statistics and the probability. That's decision making as far as I'm concerned. Oops, hold on, I didn't want to do that. Nobody move. Okay, here we go. Now, we can't do that until the end of, well, the bottom of the hour, which is in another 10 or 20 minutes. So there we go. So that kind of gets us up to speed with the data and the, I hope, what I'm looking at. This is ridiculous, man. This is a pretty weird session. Now, what have we got for a total IB? 75 to 15. So that's 30 points, basically. I hope that's clear. Now you see over here on Bookmap these IB high, 25, 50, 25, IB low. These are those values that we were just watching in on TradingView from the Edgeful indicator, or that I've coded up in investing.com, Investor RT, and which push those levels here to Bookmap. IB is going to form in another 10 minutes. And then we can start thinking about the ways that this might be a trade. And there's a couple ways to look at this. Right now, we just got through this, had we closed here, it's 50-50. I wouldn't take that trade in anticipation or front running for all the tea in China. And I think that would be, that's an important data. That's an important piece of data to know. If you think, oh, we're going to get this IB low, look how we sold down here and you're up here, and you short in anticipation, maybe not going to work out so well today. There's a couple of ways to do that. You can trade in anticipation of the level, which I don't really recommend, because in my previous world, what's going on with you? I don't want you to do that. In my previous world, I have data, hand-collected data, to support the fact that trading in anticipation of the initial balance is not a good thing to do. It's better to wait. However, some of the Edgeful guy or two I've noticed do that frequently, but they have some specific methodology. Like, for example, where that closing candle is, if it's skewed to the 50 or not. Certainly not, 30 minutes away. If it's within 5 minutes, I haven't dialed any of that in, and I'm probably not going to at the moment. But the next order of business would be, let's pretend that this continues and that the IB zone doesn't throw us out of whack. We have an 8% probability we're going to take the high and an 83% probability we're going to take the low. Well, just looking at this, there's a pretty damn good reason to front run, isn't there? But there's one other thing you can do, which is, see if this works, retracement. Now, this says that if we are trading on Wednesday and we take, no, come on, the IB high is put in first and the IB high is broken out, which is the probability, then there's a 25%, there's a 54% probability that we will retrace to the 25% level. In the case of the IB high, the breakdown, which is the more likely today, there's an 80% probability that we'll retrace to the 25% level and a 60% probability we'll retrace to the 50. What does that mean? Well, that's a pretty big deal, I think. IB high, so the likely suspect to break is the IB low. It breaks out. This is the retrace to the 25, and this is the retrace to the 50. Would it make sense to enter here or here if you know that there's a 60 or whatever the hell percentage that was, percent probability that if we break out, we're going to come back and to test this value? Or does it make sense to have this be your entry level in this area and your stop above the 75? This is the stuff I'm thinking about. Now, in the case of this, which is the RTH IB, we got a 40 handle range, so it's 40 handles across here. Each one of these is 10 points. The reason that the overnight and the Globex is so far has not been very interesting to me is this was 4 points or 8. So each one was 2 points. Well, that's not enough meat on the bone to justify a trade, in my opinion, because you got to get all the way across the entire IB or opening range. So that's why I think my focus will remain here on the RTH session. And the next question, it could be the instrument. Perhaps the Globex and the Asia opening range trades are more interesting with NASDAQ, for example, with the NQ. But here's where we are. We're going to close here in another 5 minutes. If we close right here, the closing zone would be the 25 to 50 zone. I hope I've made all of that as clear as mud. So let's see what we're going to do here. I need to think now about it. There's an 80% probability if we break the IB, they call it break down to the short side, break out to the upside, whatever. 80% probability will retrace to the 50, to the 25, and a 60% probability would retrace to the 50. I would not enter on the 25 even close. I would wait for it to get through that range and at least close to the 60 before I thought of entering. And look over here, there's a 30% probability we're going to retrace to 75%. On Wednesday, and this doesn't have the zone involved in it. It's kind of interesting. That zone, I would think, ought to be over here, but it isn't. They don't have it introduced to this one yet. So that, I think, gives you as much of a breakdown as I've been able to figure out so far. So if we're going to look at the rejection, we still have to put our zone in down here, and then these will be this will be the condition that we're looking at. I'd say it's pretty likely we're going to get an IB low breakout. Then we know what those percentages are going to be for the retrace. and we can stop and figure out what we think is going to be the right entry. Ugh. And if all that makes sense, send money. If it doesn't, send money anyway. There you go. So that's where I am, approaching trading as a business based on probabilities. And interestingly enough, when I was driving back from taking TAM this morning at 4:30 or 5 o'clock, I was, Trader Tom was live streaming, or had live streamed the Euro session this morning, and he was spending a lot of time going through his data. What's the probability of this? And we're going to trade on probability. So, you know, everybody that is a successful trader pretty much, and that's the reason I've adopted this idea. Not something epiphany that I had laying in bed. The most successful traders in the world all realize that trading is a random environment, and that the only way to profit long term is basing on probabilities and the law of large numbers, which is the exact business model of a casino. That was identified early on by Ed Thorpe, or not Thorpe, anyway. Peter Brandt, sorry. So let's see what happens. We're got 2 minutes or a minute and a half for the industry balance to form. Here's where we're trading, right smack in the middle. It looks to me like the zone is going to likely be right into this 25 to 50. And which reduces the probability a bit. Let's see what's happening over here. Oops, wrong here. Let's see what's happening here. And, it doesn't have to go much to jump up here. So let's see where this candle closes exactly. If they get it over there another couple of ticks, it's all hands off this trade for me, because that's 50-50 either way. Pretty big difference. Now, when the IB is formed, when it's finished, this will flesh out. There we have it. And we closed in the 50 to 75% range. Right here. See that? 41 basic handle range. 5% of the ATR. The high was placed first. Neither one has been taken out. And we're smack in the middle. So that puts me on my back foot, and here's why. Here are the probabilities. IB high formed first. There's an 83% probability that we are going to take the initial balance low first break on Wednesday in this configuration. But now we need to do this, and that's this zone, and we just determined that that is going to be the the 50 to 75 zone. Oop. Suddenly we have a 50-50 chance either one's going to break first. So I would very definitely not trade in anticipation of the IB break. I would definitely be waiting for the break and then leaning on the retrace. Son of a gun. I'd like to have just a clean, yeah, anyway. So there you go. And the retracement is here. So in this configuration, there is no zone over here, which is kind of interesting, but on Wednesday, this is the retracement. There's the initial balance breakout, maybe. Initial balance breakdown, maybe. And these are the two. I mean, what a difference, eh? If the initial balance high breaks out first, there's a 54% probability we'll retrace to 25. And 18% we make it to 50. This happened yesterday, and I missed a good trade because of that, because I didn't interpret this properly. If the initial balance low breaks down first, there's an 80% probability we're gonna retrace to the 25 handle, 25%, and a 60% probability we'll retrace to 50%. So this is definitely a two things. Absolutely, I will not trade in anticipation of the level, and depending on which level is taken out first, that's going to have a big impact on my trading. If we take the high first, there's a 50% probability we get here and 30% we get here. If we take the low first, there's 80% probability we get here and 60% probability we retrace to here. Pretty big deal, huh? Now, the system is coded up fairly much like we just discussed. There'll be a breakout, and then there'll be a pullback or retracement for the trigger. And that will happen over here automatically within the simulated environment, assuming that it gets the signals. And now the IB is formed. So we have the IB levels, continuation and pullback levels on either side of the initial balance, coded up over here. And we'll see what it does. And there you go. That's my story, and I'm sticking to it, boys and girls. Okay. I'm tired. Oof. I got to do something. I don't think I'm going to be up for 12 hours on the desk in a 4 or 5 mile hike in the 90-degree weather, and then a short night and up at 4:30 in the morning. I'm not sure how long the old guy's going to keep up with that deal. And it's already, well, it's 23 over here now, which is assuming these. I'm just looking at this thing on the computers. I don't know what the real temp is outside. No thermometer here, actually. And welcome to the stream, by the way. Please contribute. That's drop something in the chat, where you are, what you trade, what you think. Am I nuts? What, you know? This is my virtual trading journal, and so it's out there for all the world to see. And hopefully it's helpful, either by, oh Christ, I never want to do that, or wow, what a good idea, you know? Something. This is Blue Boy, which is the first, just a real vertical line at the first print of every session, basically, so that I can it serves as a visual cue for me. If I glance left and see this line, and I know that this is the inside market, the live market, this tells me that I have the entire session so far in view, meaning that I have a complete, thorough understanding of context. You can have similarly, if you have, session prices like this, got a volume profile like that, but this tells me exactly what happened and how the market's unfolding. And that's good for me. By the way, I'm only in this YouTube thing for the likes and subs, so please do that. A couple of clicks on your side, and it's very greatly appreciated by me. and us and whatever. Hopefully the algorithm. I don't think this stream will ever make it anywhere with the algorithm because it's too long. The reason the stream is from 8 o'clock every trading day morning until 1500 in the afternoons Central Standard Time is because I have a commitment to take no trades off of the stream. So I stream the entire cash market. Then I've just started on Sunday night bringing a Globex stream up for the Globex open and opening range, and then continuing on through the Asia opening range. But I don't know. That's because I want to investigate if there are opportunities there, and I have a commitment not to take any trades off the stream. So the only way I can do that is to have a stream running through that period of time in case I take a trade. Real simple. Keep it simple, stupid. That's my motto. Old cowboy from Montana here. Not clever or a code monkey or, I'm sure there's people that have this, play this, YouTube and all these things like a violin, but I'm not one of them. And I know that there are guys that make phenomenal money. And they can't trade their way out of a wet sack, but they've got got a gift of gab, and they do usually videos which are rear view mirror, and they seem to convince a lot of people that that's a good idea. Good for them. I mean, I don't admire those kind of people because I don't think they're helping traders, but But that's my position and point of view. And do you know who's here? You're gonna say bon dia to Antonio? Okay, there you go. What are you doing, you fat little turd? She gets any fatter, I probably won't be able to pick her up. All my times are Central Standard Time, by the way, for anybody that's new here. And you'll see that I stream the entire monitors, not just the application. So any programs that I have available or open are at the bottom of the screen, as is the system clock to the second and the date. So you can tie that back to Bookmap or IRT. One more brick in the accountability wall. And this is IRT. And we've just looked at the probability. So now, well, let me see something here. Okay. Let's continue the data idea, right? All right, so here's the initial balance formed right there. The initial balance low will no longer move. The initial balance high will no longer move. And what does that do? That establishes the initial balance statistic. What in the hell is that? Well, it's right here. The most probable statistic to achieve every day is the initial balance. And that's right here. Here's today. There is an 98.1% probability that today, at some point between 0930 Central Standard Time and 1600 Central Standard Time, this price will be revisited by one of these two prices, will be revisited by price. Boom, that's all it says. Down here, you'll see that there's an IB high and an IB low. This is a 32.6% probability that both will be broken. And this is 98.1. What's that mean? there's a 2.9%, 1.9% probability that neither will be broken. 2.9, sorry. That's the initial balance stat. That's all it says. It is, I use it as the first rule in my trade plan here. It's the first, and I'm not very creative. It's rule A, and then there's rule B, and then there's the trigger. Over here, it's got nothing to do with it. Over here, what those have, that's the breakout. That's the first rule, and then there's a trigger for the pullback. Now we know that the closing candle of the first 1 hour is right there. So that is, and we know that the IB high was put in first. So the closing zone assignments are 0 to 25, 25 to 50, 50 to 75, 75 to 100. So it is in the 50 to 75% range. And that means in statistics that we have, did I do this right? Yep, there's so it's Wednesday. It is the 50 to 75% range, and this is where we are. The IB low was formed first? No. The IB high was formed first? Yes. There's a 50-50 probability that we're going to break either the high or the low, and that's driven strictly by this zone down here. I mean, because they layer on, right? The weighting is layered on. First of all, it's just the rejection. Then there is the day. Then there is the zone. And that's how we get here. This was 8%, and this was 60 or 70%. Or 80, I think. Let's look. Why? Let's look at this. Are we looking at the right? Yeah, we are. Geez, I can't believe I got that right. So let's look at all days, okay? Look at there, 8% and 83%. What a hell of a difference, huh? Simply by, and this is data driven. This is the amount of occurrences that these things have happened on the MES over 6 months. And you gotta look at some of these. The IB high, first break IB high, this is only one occurrence. That's pretty slim pickings for probabilities or data. But let's go to this one and put this in the correct zone, which is here. Now what have we got? That just goes from 8 to 83 to 50-50. So I'm not taking any I am certainly not going to take any trade in anticipation of the zone. And the next thing we're going to look at then is the retracement, which is what we were looking at. Initial balance breakout, this would be to the top. We have a 55% probability we'll retrace to 25%. 18% probability will retrace to 50. Quite the opposite on the initial balance low. 80, 60, 30. So here we sit, boys and girls. And that's where we are at this moment in time. And I will not do anything rash or stupid or front run or do any of those monkey boy things which we are so good at as humans. Now, monkey boy is my euphemism for, or personification for, all of those psychological demons that have come down to us from our blessed ancestors through evolution. FOMO, desire to be right, risk aversion, that stuff. We're never going to get rid of them, or at least I don't believe, I don't even consider that I'm ever going to eliminate those things from my thinking or my being who I am. But I So my approach is that I try to stay continually aware of my emotions, feelings. I mean, some of it's chemical, you know. Adrenaline is chemical. Dopamine is chemical. It's like drugs. It is a drug. So you have to be aware of that stuff. And then my solution is not to act on it. When Monkey Boy starts, you know, oh, come on, let's go. This is going to break out. I just invite him out to the backyard, slam the door, and then, you know, come back to the office and regroup. And that's the way I approach it. And I, you know, so I don't have a problem with overtrading or chasing, moving my stops away from entry, any of that stuff. That's long gone. Now I do have in this change or this behavior deal to using Edgeful for a data source rather than backtesting and leaning on just my statistics 100%. If I can show you an example here, I hope. Let's get over here to yesterday. Get over here to yesterday's RTH. This is last night. That was so interesting. This is Glowback. Bam, boom. And when I scroll out, my goodness, look where we went. Exactly to the initial POCs from the open of the RTH. Isn't that funny? Not funny, haha, but... And then look where we go just at the close of London. Just before the open. Same exact level. Interesting. Now, what I wanted to show you was yesterday's... Yeah, okay, I can do it right here. It's right here. So, here's the IB high. Here's 25. Here's 50, right? 25 down here. So, if we have and remember in the data that we have I'll try to get this all up so I can show you all this stuff. Okay. Initial balance high. We have a 55% probability we're going to get to the 25. Retrace to 25. We have an 80% probability that we're going to retrace to 50. Now, this was a little bit different yesterday in that there was the 50% we're going to get to the 25. 18 we're going to get down to 50. So what does that mean? Where I blew it was trying to be specific to get to 25% and not taking this entry zone for the long. Beautiful. Wouldn't that have been lovely? And that is, in the terminology of the TLab or static, that's an IB continuation trade, old basic one, right? My thinking should have been, okay, when we pull back, wherever we pull back, that's an entry. And my stop goes below the 18%, which is 50. Safe stop, right? And if you want to look at it strictly in price action, you enter on the pullback and you put your stop below the swing low, which happens to be the POC on top of everything else. So that was my misread and my error yesterday. Now, as price took off and, you know, left me crying in my beer over here, I didn't chase it. Of course, I could have gotten in somewhere, maybe this little pullback, and pulled a winner out of it. But in my mind, that's a chasing, and that's a bad thing. That's a no-no. So, there we go. That's my story, and I'm sticking to it. Bye, golly. And we are now easing down towards the low. And Mom's cooking something that's smelling pretty good. I call her Mom. Sounds like I'm a... What was his name? It's just a habit you get into with kids. Go ask mom. Why is this doing this? Why are you not playing right, IRT? What's the story here? This should be right here. There we go. Not an Oedipus complex. Oedipus Rex, wasn't that it? Wasn't that the guy that fell in love with his mom or some weird thing in Greek mythology? And looking at the bigger picture over here on our micro composite chart for the minis, or the micros, there's the open, and here we are. We've taken out the POC, and I don't have that properly indicated over here. About 97.75 looks like the MCVPOC to me. That's right here, about there. 97.75 is good enough for the girls I go with. And let's get over here and find out what old Boomer's done wrong here. MCVPOC, there we go, 97. Wow, that's not. Am I that far behind the curve? I guess I am. Jesus. I don't know why, what happened to me there, but anyway, sorry. And that was yesterday. So that is, oh man, this is clear back on the 27th. I am way behind this curve. What the hell's going on here? Oops. 020626. Boop, boop, bop. Now. Oops. Now we got him. Isn't it cute how it conveniently drops right in on a high volume node, as I would expect, as we would expect from the high and low volume nodes over here in the micro composite? Wouldn't you expect the POC to be the most traded price? And yep, there we go. All-time high. Whatever else is happening. So there we go. Well, many things going on here, it looks to me like. I hope that contributing in the chat there, that's a real big, that's really nice. I really appreciate that, very sincerely. And we've had some quite positive results from conversations in the chat. Anton has shared his concepts about the risk management, the hedge risk management technique, which is what I've got this set up to trade today, in case something happens. And that hedge, let's just go through that because I did it early and I'm not sure what else. I'm sorry about the typing. I've got to change the hotkeys for my session chapters to reflect these new things. I'm just lazy. What can I do? Well, maybe not lazy, but anyway. So the way the hedge works is, and this is completely legal, any broker or prop firm. This is not wash trading or any goofiness, or anything like that. So, and I've actually gone directly to the tech, the tech support and the trade desk of these places to confirm for sure what I've read, and this is very definitely legal. So, on the micro, ES, the initial trade is a 5 lot. And by the way, as you see here, it can be copied, traded, and the whole shooting match, no problem. So the story goes. So that's set up for a 5 lot. The hedge comes in here on the mini. Not the micro, the mini. And that's a 1 lot. Okay? Now, if you understand the ratio of micros to minis, it's 10 to 1. So, the way the hedge, and the hedge is only used in lieu of a hard stop. So, and never trade without one or the other, or, God will get you. Let's go dark, huh? What do you think? I don't like that light thing. It makes my eyes goofy. There we go. So here's my tool, and we'll set this up hypothetically. On Bookmap, let's pretend that we are hypothetically going to go long at whatever. Where are we trading now? Let's call it 85s, okay? Because easy number. Let's say we're going to go long at the 85s. So 75, let's jump back over here, and I'll show you this in my tool. Ooh, my tool, baby. 75, 85, okay? Now, that's our entry price for 5 contracts. And you notice I've got this set up where it can plot all these things, and this is a long, going long. Shorts the other way. There's our entry price. 75, 85, 5 micros. Boop. Our stop would be, and this is set up based on however many ticks I want the stop location to be. In this case, it's 12 ticks, which is a 3-point stop. Previously, I was using 5 points, which is 20. Very, very simple, very straightforward. Nothing mysterious or magical about this at all. So here's the stop. Well, instead of stopping out, we add 5 more micros and short 1 mini. So this is 10 micros, 1 mini. That is exactly a hedge. Maximum price, maximum loss is 1.5 points. Price can go to the moon, can go to the bottom, can go to 0. If you don't touch it after that, the maximum you could possibly draw down is 1.5 points. The theory about it is it's giving time for the market to move or react in a direction that you had analyzed it would originally, or anticipated that it would, without taking a hard stop. Then let's say that we get back up price. Now we're in. Now we're hedged. It's price is up, price is down, price is all around. Trump says something, goes out the floor. Iran says, no, we didn't say that. It comes back to the top. In other words, typical price action in this environment. Let's say we get back to our original entry, or let's say we get back to 83.5, whatever, pick one. Let's throw it in here. So we're going to take off the short leg here because price is trading up, and then we think it's going to continue to. We're going to take off the short leg at 75.8350. Whoop. There's our scratch. When price reaches 75.85, that's scratch. In other words, 0. If you took it off right there, if you flattened right there at that moment, the entire trade, this drawdown, up and down, whatever happened, is 0. Is a dead scratch. Price continues up, you're in profit. Now you got to be on your toes, because if price continues down, you are long 10 micros, the equivalent of 1 mini. So you need to have risk management at the forefront of your mind in case price starts going the other way. You can put the hedge back on. You could put a hedge on here of one. You could short 1 mini here, and that would be a dead scratch. You could, whatever you got to do. You can't just sit there and go, oh yeah, this is great, and then watch it go against you, because all of a sudden you're going to be upside down several $100s. Remember that 1 mini, well, 3 points on 1 mini is $150. So there you go. That's how the hedge works as a time stop for the full, in lieu of a full stop. Now, there you go. That's the hedge story as a trade management function. And look at our price here. There's the IB low. There's the IB high. What did our data say? 50-50. What are we doing? We're banging it up and down and all around. No meat on the bone here for a trade, in my opinion. I'm certainly not going to trade in anticipation of a level. I'm smelling breakfast. You know where this is going. It's boring, but trading professionally, responsibly, as a business based on probabilities is not an adrenaline-packed, fun-filled thing. It is primarily boring in that you just spend a lot of time waiting. If you don't have a triggered trade, you do not make up a trade. You put Monkey Boy in the backyard and say, thank you very much, go play with the raccoons, and you wait. So there you go. What's happening now? We still have the musicking. That's a good thing. It's probably getting about ready to poop out. If the music is too loud or, not any good or something, let me know. I do not have speakers here in the trading desk. If I wanted to hear what was going on and monitor that, I need to put on a headset. I think we're about done with this one. Yeah, we're on the last song down there. In case you don't know or care, if you stream yourself or anything or thinking about it, YouTube is super conscious of copyright infractions and stuff, which they should be, and so should we as content providers. I looked up and down and back and forth and all around, and on YouTube you'll see a lot of these, and they're great, lo-fi trading music and all this copyright free using your stream bullshit. I tried one or two of those the correct way, which is to do it, use that content, stream it for a short period of time, then take it off and leave it private, not public, so that the YouTube algorithm and analyzes it to see if it's copyright protected or not. And every one of them did have copyright problems. I ended up having to subscribe to and pay for Epidemic Sound, which gives you a whole felonthora of music, which is, and you get a license from Epidemic Sound that is tied to this stream and the YouTube channel. And I've had a couple of strikes or provisionary things, which I answered immediately and said, no, here's what I have from Epidemic Sound. Here's my license. If this is not correct, please tell me, because I'm paying for it, and they advertise that it is. And that was the end of it. I've never heard anything more, and that has stopped happening. So let's do something else. Let's listen to some blues now, I guess. Oh, no. How about just some classical, regular jazz? And you can also filter out vocals. Hi, baby girl. Ooh, breakfast girl. That's okay. I've got a million of them. No problem. Thank you. Oh, that gal is absolutely wonderful, I'll tell you. What am I doing now? She got me so confused. I forgot what the hell I'm doing. Okay, vocals. We don't want them. We want instruments only. There we go. Now we go. This is going to be classical jazz. Well, what I was showing you, and I had the wrong screen. This is epidemic sound. This is how this happens to be when the way I do it. You can do all different kinds of things here. You can pick these different things, or what I do is go to this and then pick it out, you know, whether I want mambo or Latin jazz or whatever. Right now we're on classical jazz. And I have not been able to find a lo-fi or anything that is not, you know, in your face. I want to do drugs just to get away from this noise. I don't know how you do that. And I don't spend any time trying to figure it out. So if you have any suggestions, there you go. Let me know. I will be more than happy. So we've gone through the hedging. We have gone through how I backtest and vet, how I'm using the new, my new data analysis tools with Edgeful. And here we sit. We are in a 50-50 probability based on the data. Here we can do something else while we're kind of waiting around. So we know that we're in a 50-50 probability. Let's get back to the retracements, rejections. Given the day of the week, the IB high was formed first, and we had the ending zone between 50 to 75%. We have a 50-50 possibility. A coin flip, which one we're going to break first, the IB high or the IB low. Based on MES 6 months. Let's see what happens if we push this out. Let's go to a year. Ah, what a difference, huh? What does that tell you? That tells you that this current environment is something to really pay attention to. And this is one of the things that opened my eyes about my backtesting with IRT, because I always approached backtesting from the point of view of, well, I want the largest data set I can get of samples to give me the most probable statistics for my expectancy and range, you know, risk reward and R value and all those kind of things. And I think that was a wrong approach, because as someone pointed out, how many successful strategies that worked 2 years ago do you suppose are working now in this environment? And I gotta guess none. So here's 1 year. Let's go some more if we can. Let's look at 2 years. Coming down a little and kind of sneaking up, but certainly not anything like the past 6 months. 50-50. Interesting. Really, the data and data mining is really interesting, I think. And while we're on the subject here, it seems like I'm kind of killing time or filling time. That's pretty much right, because there's nothing to do except refine the data, refine the setups, refine the probabilities, go over the strategy and the risk management and the trade management. Those are the things you do to be productive when you're trading by statistics and probabilities, because you don't just start making crap up and firing them off, you know? You put Monkey Boy in the backyard. You don't start falling into the human trap of seeing patterns every place, justifying a reason to trade. If I stand here all day and don't trade, guess what? That's what I did yesterday too. And I'm disappointed yesterday that I missed that trade, which I've already explained and gone through. That's my problem. And that's definitely a problem. But I am not going to overcompensate for that by chasing or revenge trading or, you know, just clicking the mouse till I wear the damn thing out. So there's that. That's how I approach this business. Remember, this is just my approach, and I'm completely transparent. And by no means do I suggest this is my way or the highway. However you are, whatever you do that is consistently profitable, absolutely don't change. And, you know, let us know in the chat. That's for sure. So, let's see where we are and what we can do here. Oh, you know who I haven't checked in on? What's Walter Bloomberg up to? If you're not familiar with Walter Bloomberg, you might want to be. I can't show you it on this trading machine because I don't have anything to do with social media stuff. But I found out about a guy who is on X, which is extra bad for me. And it's, I'm sure everybody else does, you know, is a member or whatever you call it. Walter Bloomberg at Delta One on X. This is a fella in Switzerland who has a Bloomberg terminal, which is $31,000 a year, $2,600 and some bucks a month. And he posts regularly, like here is a post 6 minutes ago, 19 minutes ago. And when you see the posts all in caps, that's a copy and paste from his Bloomberg terminal, as I understand it. 6 minutes ago, Musk's XAI pauses hiring for specialists to train Grok chatbot. 19 minutes ago, Besant, inflation is going to be a short-term blip. Yeah, right. 23 minutes ago, Netanyahu, we want to change relationship with the U.S. from aid to partnership. Netanyahu, further, I want U.S. Israel to invest equally, share in fruits of investments. Yeah, well, Netanyahu, markets are not wrong. In other words, he's trying to keep things stirred up and perfectly understandable. He's got his own agenda to deal with. So there you go. That's the Walter Bloomberg at Delta One on X. Interesting news. Interesting source. Now, I was going to do something here and I don't remember what it was. As I wait and watch, and as the day winds on past about RTH 1, my interest wanes, as do the probabilities. Another tool that you might find interesting is a risk calculator, which I just figured out and coded up over here into this Sheets book. There is one from Edgeful around, based on the instrument, whether I want it to be ticks or dollars. What's the account or the drawdown per trade? And then this is per trade. How many lots am I going to trade? What's that per lot? Based on 4%, 4 to 8, 8 to 12, risk, in other words. And you put the percent risk over here, and it gives you the consecutive stops in a row, consecutive, to blow up the account. And then this would be based on a win rate, what the probability of 8 stops is in 100 trades, and the profit factor is you need that win rate to maintain the account. I always forget what that means. Break even minimum. Okay, you need this win rate to break even. Simple calculator, but stuff you gotta know, I think. Well, I don't think I know that. You have to know these numbers and this data, or you're going to find out you're upside down and don't know it. So there's my typical setting of 1 point per increment here on the price ladder. So I can kind of keep some consistency in the scale. Look at that thing, man. My assumption here is that they're waiting for something to happen. Notice this liquidity flashing down here at 74. Watch that. Oops. Watch that. Watch them flash it down here. And I guess they're waiting for something. Iran to say, something, or Trump to do something, or there's no news coming out. So, I don't know. I don't know. Let's see if we find some interesting little tidbit of who knows what over here. Well, there you go. Well, all I'm seeing is the ISM stuff. And that's been out quite a while. Here we go. Iraq. Oh, the crude oil inventory. Is that what it was? Yeah, that's coming out at the bottom of the hour. No, it's out. The Cushing crude number. And I guess that's got to be not very rosy compared, depending on the this mess they got cooked up in Iran. Well, how exciting, huh? I guess while we're doing this, I could go through the an additional level of the Edgeful stuff, which I found really, really interesting. It's in this algo department, which I have not subscribed to, but they had a like a teaser. You know, you could go look at the optimizer for a couple of days, I don't know, week or something like that. And I spent a lot of time with it because I'm really keen to find a more expeditious and efficient way to do my back testing. So what that is, let's see here if I can. Are we going to do something stupid? No, doesn't look like it. Yeah, somebody come out and say something and the bottom fall out of the market. But the Edgeful algo, they call it algo optimization results are as this is what you get. Now, this is the optimization stuff, ticker and all these things. The levels and the stops and the things that I want to have happen and where. The results of the Monte Carlos for each, and then if you click on this curve, you get the results for that particular one based on the profit factor and all these things, win rate, etc. And here you go. Now this is out of sample data, so this is held back. This is when I was doing a what if and forward testing. There's the equity curve. Drawdown. The stats around this, the strategy health, they call it. What it is are you kidding? You know, are you kidding yourself? Have you cooked this up and overfitted to such a degree on a certain block of data that this is stupid and it would never possibly function in the real world? And there's a rating for all of those things. And this says 80% profitable months. Okay. Then we have this is training versus out a sample versus out of sample. So this is a way you can forward test data. You optimize the strategy. You run the this thing over let's say all the data up to through 2025. And then after that's been optimized, you switch to the out of sample, and you run it. And these are the results on that data. In other words, it takes the optimized strategy and runs it over data it never saw before. In my case, I did this. I trained the data on the through 2025, and then I ran it on 2026 data. And here's the difference. Then we have the trade performance by day, which is so important. I hope I've gotten that point across to y'all, in these streams, and how that can affect our probabilities. Just like right now, the closing zone, what a difference that made in the probability of this Edgeful trade, this initial balance trade, and why I would never have traded. Well, here, why I would have never. Normally, you would take this trade to the IB low, knowing that it's a 50-50 coin flip. You're going to get the lower the high. I'm not going to trade in that direction. That's a big deal, I think. This is the time of day statistics, long and short, rolling window, monthly P&L, distribution of exits, stops, T1, T2, end of day, etc. Splatter plot, I can't even talk. P&L distribution and R multiple. So this is pretty much as, if not more, detailed back testing than I'm able to do with my IRT because I can't plot in sample and out of sample forward testing and that kind of stuff with IRT. If I wanted to do oops, wrong one. Sorry about that. If I wanted to do IRT back testing, which I do, I showed you those results in that spreadsheet. This is how you run it. There's the instrument, there's the contracts, there's the session, there's how many days back you're going to look. Do you want all this stuff to happen? These are the various reports, and then you can go okay, and you run the back test. Now, the only way to forward test or out of sample test, walk forward they call it, is to set the back test window between, from beginning to end. In other words, 2025. Run the test, see what you get, and then run the test over the other data. And you can do that. There's actually an optimization and forward testing stuff over here, which I don't really use, to be honest with you. And if you want to run the back test, then you just hit that button and it'll run the back test up here. And these are some of the reports that are generated. And it doesn't like thinking about this stuff when when it's having a problem doing data. But here's the P&L. It's got all the things, and then there's the individual. There's the trades that happen through the day, average winners, losers, consecutive trades. Here's each trade. I can't widen these out because it doesn't want to. There we go. This is each and every trade taken over that period, and the trade entry type, the exit types, the P&L result. And if this will be nice, there's actually a P&L curve here somewhere. So there you go. This is how I have been doing my back testing and my statistic strategy development. This takes me forever. Obviously, after it's back tested and after these things are built, and this is, I've come up with my own method of what ifs down here. And that uses all this stuff in my main. All these things can be what ifs. How many stops? How many T1? How many T2? Does it trail? Does it not trail? What's the IB? What's the ATR? What's the IB range? All this kind of thing. This was my way of the way I just worked out for myself how to what if this stuff. But obviously, that's so much more that's going on here. I don't want this. They must have updated. This thing does this frequently. I don't know why. Well, I don't know, frequently, like once a day. They probably pushed out an update. And so now I'm going to have to start over because it'll be back again. So, but, by being able to do the what if stuff over here, and then to be able to see those optimized results, which is essentially a really in-depth backtest. That's where I'm headed, I hope. If you're a gambling man, you're betting on that IB low. Gambling trader, I should say. Not man. Gonna take me a while to swing into this new routine. It's kind of funny because we had kind of gotten out of started getting to sleep or, to bed, winding the day up later just recently. And then now all of a sudden I got to flip it on its head and be hitting the floor at 4:30 in the morning. I guess I could get up another couple hours and trade London. Or, just get a big bag of blow and just stay up 24 hours, I guess. That'd probably work out pretty good. Maybe not. I'd say they're heading for the lows down here. Not even remotely interested in trading directionally on that. And remember that we're 50-50. Now let's start thinking about what I'm going to be looking for. Oh man, I got to start all over this thing. Okay, that was pretty cool. What have I got now? All days and no zones. Okay, cool. So, what we want is, we want to know about what days it is, don't we? We saw how important that was. I was really surprised at that when I started seeing the dramatic differences in the days and also in the zone. And we're at the 50 to 75 zone over here, if I'm not mistaken, right? Yep. Okay. That's our configuration. Now, and we're looking at this one because the initial balance was formed first. And I can prove it. By golly. Here is the session. These are the zones. That's the IB put in first. Here's the IB put in last. Here we are. You want to look at TradingView, which is a lot prettier than what I've got going on over here, I guess. There's the IB high first. There's the IB low. There's a continuation candle closed in the 50 to 75% zone. Remember that you start assigning the zone values opposite the first level formed. So 0 to 25, 25 to 50, 50 to 75, 75 to 100, all right? And that's where we get that ending zone. Now we're down here. I should say now price is down here. ATR is something or another over here. 3.5. Okay. Back to, let's get this back to where it's normal for people who care and edgeful. So let's look at let's see if I can do this. Yeah, I don't know if it's quicker to do it over here. Will I have to do something different? Let's see. Yeah. Okay, so I've got to throw my by day over here, wherever days of the week went. There we go. Wednesday. So, if the initial balance breakout is to the top, these would be the values. If it's breakdown, which it should be based on the statistics, the typical statistics, and based upon which IB level formed first, we'd expect the low to be broken first. And there's an 80% probability of that. this does not take into consideration the closing zones. And then a 60% that will get to 50. So I'll have to think long and hard about that, about what I would do there. As I pointed, I went back, we went back and looked at what happened yesterday, why I didn't. So looking at that in the real world, this is the IB low, this is 25, 50, 75, or 25. Breakout. 80% probability we're going to retrace to here. %60 probability we're going to retrace to here. We're going to take the IB low right now, it looks like. And I need to think about what to do. Not because I'm going to force something, but I want to anticipate the situation and have a plan of action in mind. So we one tick the IB low. Let's see how fast thing over here is keeping up. IB, it says no IB is broken yet. Look at this. Now if you're looking at Bookmap, it says this was broken. If you're looking at what is this thing called TradingView? It's not. That's not good. Imagine if you're trying to trade on this. Now, the price is moving in the same direction and at the same level, right? It's moving there and up. But it very definitely one tick that. Let's see what IRT says. Jesus, Christopher Christ, is this going to, I don't want to have to trade by quorum. Well, there's the IB low. 75, 74, 75. Oh, that's pretty cute. And if you look at the info box here, wherever I hover my mouse, this info box gives the details about that candle. So the low is 75, 74, 75. I guess then it depends on whether you consider it taken out. If it did not one tick below it, it ticked to the level. Okay. Let's have a look at the statistics page and see what this thing has. Now I'm going to need to update this. I don't have this refresh automatically all the time. If I hold the shift key down and click this little guy, it'll refresh. It'll recalculate everything right over there. And if you notice, this is blue. Any level that has been revisited or achieved, it changes the text from black to blue. According to IRT, this has been tagged. Now, this says touch. This doesn't say exceed. And it did just touch. I guess that could be the difference in definition with TradingView. What's happening over here? Let's look at this one. Ooh, baby. Again, touch. Now, this couldn't possibly be the breakout, because the breakout requires open inside, close outside. But I think it's kind of interesting that we don't. There's a question whether that IB has been taken or not. And a big selling tail, right? Or I guess that's a buying tail. They didn't get anywhere. They sold it hard. Everybody said, no thanks, we're going back up here, another trading the other way. I tell you. This is turning into, these days are interesting, not very profitable. And I don't have what I need here, in case you haven't figured it out, besides, to be up to speed better with my setups, is to have more vetted setups. Essentially, I have the initial balance setups or the opening range. That's it. I need to develop the VPOC migrations, any different ones that I'm able to identify, so that I have more than one bullet in the gun, right? That's, you don't have a very long football game if you only have one player on the field. Sorta. Or your analogy of choice. What's Uncle Walter saying here? What is anything cool happening? Nope. Okay. Now, depending on your interpretation of the initial balance statistic, was this the retracement? And I'm going to again be cursing myself for not taking. Is this the retracement between, before 80% or whatever the hell it says over there? No, because I need to be up here. But you see the point. Hey, Magic, what's up? Crazy day, huh? Because of the ending zone in the edgeful rejection report, it's a 50-50 toss-up today that which one of the trade levels we're going to break first, and we have just come down and touched the IB low, but not really penetrated it. Penetrated. According to TradingView and IRT. And very definitely not a high probability day to be taking trades as far as I'm concerned. Statistically. Hope you're doing good. Trading the hell out of things and making money hand over fist. I don't know how much longer I'm going to continue that Globex stream starting at 1700 till about 2000. I've done it now, since Sunday night, but we just had a change in the schedule around here, so with that stream, I'm on the desk here about 12 and a half hours or more a day, and then now I had to get up at 4:30 to get TAM delivered somewhere by 6. So, oh, very nice. Excellent. Very nice. A lot to be said for discretionary trading. Absolutely. $200 points, nice, or whatever you said. Yeah, I agree with you. I was just trying to, assess the opening range breakouts in Globex and then in Asia, not the entire session of Asia by any stretch. And my commitment to not taking any trades off the stream means that I need to be streaming that until I decide useless, and then I'm not going to do it anymore. And I'm sneaking right up on useless, especially since I haven't seen anything the last 3 days that were even remotely tradable with regard to the statistics, the proper opening range setup stuff. And now with this 4:30 in the morning drama, I'm going to probably be looking to get to bed pretty early. Hey, Czar, what's up, my brother? Boyki. What's up, my Boyki? Yeah, let's get some booties and chops and a couple of castles and fall out the tree. What do you think? And of course, I have no idea if you're a Boyki or not, but you know where I'm going. Oh, I forgot. How's it? I forgot that one. You love that one.
Are you talking to me, Magic, or Czar? Yeah, no kidding, Czar. Yeah, for sure. I'm in Magic. I'm in Houston. I've lived around many places in the world. The joking back and forth with Czar Trader here is I lived quite a bit of time in sub-Saharan Africa and finished up several years there in South Africa. So I'm, have a little bit of the boiki and the buris and chops and understand that stuff. And then, excuse me, I lived about 11 years in Kuala Lumpur until we just moved back here to Houston. Never have lived in Texas before, but moved here to Houston because of some work. And my wife and daughter are Vietnamese. And there you have it. And I was raised on a cattle and horse ranch in Montana. When I make the joke about being an old cowboy from Montana, that is exactly the truth. No, yeah, it's stinking hot. Tams needs to be doing some exercise stuff for school, so I go out and walk with her, the last few days this week, and it's, we leave around 3 after the stream. After I close the stream down, it's 91, 92 Fahrenheit, say 32, 30 to 34 somewhere. Yeah, stinking. As I said, I'm from the North Rocky Mountain area. Montana, Wyoming, Colorado. I haven't lived there in a long time. All right, man. Take care. See you later, Magic. Congratulations on that short. Man, these guys are really killing me here. And you know, some goofy, you know, Trump will get his phone fixed or whatever's wrong, why he's not tweeting all over the place, and then there'll be some giant move one way or the other, I suppose. Okay, I'm going to have to figure out how I'm going to do this. How the schedule will change this afternoon now. I can tell you that 4-mile walk in this heat's probably going to get postponed today. I'm enjoying doing it, but, you know, takes a lot out of you. Especially getting the day kicked off at 4:30 in the morning. And this kind of price action is just mind-numbing. Picking that swing trade would have been great, huh? And that's right down to that exact level where the Globex dropped, and that's the first VPOC level from yesterday's RTH. See if I can not make a liar out of myself and show you all this thing. So notice this level, and here we are now. Okay, here we are. Open. Now we're back here to this same price, right? Oh, I'm full of shit's a Christmas goose. I was thinking about this one here, where we pulled back to the RTH VPOC here and then tested to it here. Now what these levels are about? Oh, well, looky here. The lows. Amazing, isn't it? Boom, boom, boom. And this one here pulls down out of no place in the Globex right to this POC and then back up again. And then the open and down we go. I mean, what those levels represent, I would imagine, are some sort of big strikes. Something that I don't necessarily understand, likely. I'm having a pretty tough time justifying continuing these Globex Asia, Globex Asia, Globex Asia. I don't know whether there's real opportunity in these things or not. In this case, it's completely backwards. It's a reversal. Asia kind of went up okay, I guess. Someone was telling me that they're having great success trading these opening range trades in those two Globex and Asia Opens. So I thought, well, I would look into that, and in order to maintain the no trades off the stream rules, I've been streaming them. I guess I'll try to tough it out for this week and see what the analysis is overall. But Sunday, Monday, and Tuesday was a nothing burger so far. Oh, we're going to pop down through them now? Let's see. Take that liquidity. There we go. Now we got some. There's going to be no question in anybody's mind that that's been taken out at this point. Let's look at Trading View. 50 bucks says Trading View's got it taken. Yes. Look at there. The low broken. Oh, ho, ho. Who was that masked man? Okay, that fits right in. We already know that over here. Ironically, a long damn way from the IB high or low in the NASDAQ. Look at this. And we're trading up here. Getting some selling action over here on the this is the overall of the MES. And I'm asleep at the wheel down here. Hold on. Let's do something. I don't know what. Yeah, here's that new. Here we go, taking out the lows. And into outer space pretty much until we get over. You know, how many days back is that? 1, 2, 3, 4 days back. Thursday, I guess. Or Friday. Friday, I guess. And they didn't exactly rip your face off there either, did they? So we've traded through it, trading back over it. Would this be an IB continuation short? Leaning against the 25? I don't think so. Let's see. Well, here's the breakdown, which is correct. According to the statistics, there's an 80% probability we will now retrace to this 25% level. So getting short down here doesn't seem to make much sense to me. You're betting 20% they're going to continue against 80% that's going to pull back to here. And 60% probability to here. It just doesn't make any sense. It looks like a very low probability trade. And and probably, and but in reality, we're probably going to come up here and then sell her down. I don't know. The magic of trading. There we go. Now we're showing those statistics who's boss, huh? I'm sure someone in Static saw this as a consolidation breakout retest, a bar trade. Similarly here. And I'm guessing we're looking at the 60s down there. You see how 65 just flashed in up here and 60 pulled away? but that's not something I can short. It didn't do anything. And I don't feel at all similar to yesterday, because it wasn't an issue of between the IB and the 25 zone. There's an 80% probability to pull back and 60 to the mid. So I'm gonna go with the probability. And in this case, I may be wrong. Well, there's 10 handles. There's 10 handles wrong right there. I don't know. Yeah, there we go. There's $1. So there's $1 range. And it's probably not a good idea to go short in the hole. And I think I need to have another T and fall back and think about this for a little bit. Refresh. This is probably going to be a little more erratic than normal until we get this new schedule figured out. Not with the stream, but with life, you know? That other thing that happens besides the stream? Besides trading? That thing some of us that we do apart, you know, besides trading, what is that called? Oh yeah, life. Oh boy. I'll stick with this, with the statistics, and that's about all I know to do. Oh, come on, man. Rotating. One of the statistics that doesn't happen or isn't obvious to me at this moment was it's full stuff, is the IB continuation. Well, we have the We do have the levels, which are continuation stats. So I guess I'm wrong there. Why this thing is doing this, I don't know. Now it doesn't want to resize the. There they go. Jesus. Resize the wrinkles. Again with the difference. Look at this now. Watch this. Look at how this NQ, this has got a 6-second lag, but look at the updates. 8:57 and it's 11:32. Now, if I move to this chart, there's no lag. Up to date. If I move back, up to date. So during the break here, or the next, and I'm going to create another quote page for just the micros and one for just the minis, and see if that eliminates that drama. And also, I would suppose it's contributing to the lagging, the lag story. Always something in there. Pay good money monthly to get irritated. Welcome to the stream, by the way, if you're new. This is my virtual trading journal. The concept here is that I don't multitask well, so to keep a journal up, which I believe is important, it's pretty tough for me to be screen snapping and typing and trading at the same time. So everything that I see here on my screens, Bookmap and IRT, is captured in the video, and then my voiceover here provides insight as to what I was thinking at that moment, and it's streamed, as you know now, to YouTube. And that provides complete transparency and accountability. Also, from my point of view, having it streamed to YouTube is really handy because I can review the stream on any device. And I'm standing here at this trade desk about 12 hours a day or more. So to be able to jump to whatever parts of the stream I want to review or something, and, if I'm laying in bed or, kicking back on the couch or whatever, I can do that. So that's another plus for the YouTube stream. And I'm not monetized in any way, of course. So likes and subs are great and much appreciated. Joining in the chat room is a real big plus for me, and I'm assuming others. So that's great. Thank you. I appreciate it. Now I have to start thinking about getting organized for the middle of the day, and then I've got to pick up our daughter at 1400. And I should be back here before the stream winds down. Hopefully back by 14:30 for the market cap and the final 30 minutes of power hour. And then I'm going to give a hard thought as to whether I schedule and stream the Globex Asia tonight, but I suppose I should at least have 1 week on it. Just to see. 65s look alive. Got liquidity laying down there. Laying up down there. And that's RTH 1 come and gone, so I'm gonna make sure the music is musicking for a while, and I'm gonna jump to the shower and try to get redone, revitalized. Ooh, we got a double bottom here. Ooh, baby. That's one of the beautiful parts of trading. You can come up with a saying or pull one out of somewhere for any situation, either direction. That's because trading is a random environment. To predict it is ridiculous and futile. And the only way to be successfully profitable at it, I believe, is to have pre-identified, pre-vetted setups, statistically vetted, and then trade them and lean on the law of large numbers. That's exactly the approach I believe, and I understand is the best way to go. So there's that. I'm going to step away for a bit, so keep them close. If you're making money today, good for you. I'm standing by because I have no statistics on the come here. And here we come. Boy, if they come back and take out that 50, I'm going to be absolutely amazed.
The IB low is taken.
Oh, they got back to the 25%. That's pretty funny. There's a 80% probability that they would retrace to here. And they did. That's amazing. Okay, the craziness of the day continues. On my way now. About to pick up Tam here pretty quick. So I hope you're having a great day. This is pretty crazy on my side, but keep plugging along here and see how it works out. Ooh. And no trades signaled or taken by me. Now here is a short. Why this? Per this strategy based on the breakout, the retest, and short. Typically, this needs to be recoded. In the case of these trades to the short side, they need to be retraced. It seems that there's a see the difference here. If the long breaks out, if we break out to the long side, it's a retrace is 50% to the 25 line, 16 to the 50. So it needs to be between the two of those for the entry. On the other side, we've got 80% to the 25 and 50% to the, or 60% to the 50. So my thinking is to put the entry at the 50 on the short side here. In other words, here instead of here. And we'll see how this plays out. Again, this is in simulated, IRT simulated mode, so no harm, no foul. But it's forward testing, so we'll see what it does. And nothing over here. Nothing has happened over here. Oh, yeah, there was a couple little shorts over here that got stopped. These would both have been, there's the A and the B. These are IB failures or IB pullbacks zone. This is why I stopped trading this, is I don't think these hard-coded zones work well compared, especially when compared to the percentages. Be really interesting to see if we get to the 50% zone over here, which we have a 60% probability that we're going to retrace to right here. So let's see if that happens. And now I'm going to have to leave the bottom of the hour and go hook it across. And pick up our daughter. Part of the confusion here is that I'm the only driver in the family, so I'm soccer dad, or in this case, work dad. But anyway, you get the point. Hey, Steven. Welcome to the stream. It's risk neutral trading. This is my virtual trading journal, so it's definitely not my way or the highway. This is for the idea here is to have complete transparency and accountability for what I'm doing and thinking and talking about, and then we grow. You know, I'm certainly all ears for suggestions. The concept of this virtual trading journal is that what I have on my screens here is captured in the video, and that's about as exact as you're going to get. And my voiceover provides insight as to what I was thinking, so I don't have to be focusing on screen snapping or typing or anything. And I have a complete and absolutely accurate record of everything I did, and any and all trades I take are on the stream, so there's no question. That's why I'm now this week have a second stream starting at 1700 until about 2000, and that's for the Globex and also the Asia, to see if there's openings, to see if there's any potential interesting trades there in the opening range trade. I don't know whether that'll continue or not, but I have to stream it in case there is, and I take a trade, if you see the point. So yeah, welcome very much so. Nice to see you, by the way. I really appreciate it. It's nice to have people drop in and contribute in the chat. It makes for a less boring just listening to the old guy talk all day. And there's been some good collaboration, real interesting. On Antone, who's on vacation this week, has brought forward a really great it's his basically contribution, the Hedge trade management system. So there's that. Now at the bottom of the hour here, which is in about a minute, I'm going to scoot, and it ought to only take about 30 minutes, but that depends on how ready she is to a round trip. It's not that far away if I don't have traffic and she's ready to roll. So we'll see what happens. I actually think I'll wait a little bit, because it's supposed to be done at 2, so 1400. It's now 1329. This is Central Standard Time. All times on my charts are Central Standard, and that I refer to. And if you notice at the bottom of the stream, I stream the entire monitor, not just the application. So any programs that I have potential or open are obvious at the bottom, and also the clock system time in hours, minutes, and seconds, and the date, which can be all tied back to the timeline on both Bookmap or IRT. And this is IRT. Yeah, no problem. Then this here's a walk down memory lane for you, my brother. There you go. And that's just every day from the TLab snap. And you know, I always when I post that in here, I always make a comment about the a little plug for the TLab and Tom, and how I appreciated my time there and the nice people there. And so I explained kind of why I make this post, and I also post the numbers early every morning, as you probably know. So there you go. That's how it works. And yeah, you're more than welcome. That's my pleasure. Absolutely. What I'm doing over here, as at Tom's, since you're from there, you understand that Tom continually pitches about always trade vetted setups and trade, focus on your market, and that's exactly what I do here. This is, for example, this is a vetted setup for the initial balance, IB continuation or failure. These are the specific rules that would dictate that. This is how this system is trading on the charts. This chart has nothing to do with the system. This is just for me to visualize this thing's doing what I think it should when, And the same way with this one, which is a different system I was just talking about. And the problem I've had, and that I'm trying to, I'm in the process of hopefully fixing or improving. I'm literally an old cowboy from Montana, and I am certainly no code wizard. So putting this all together in a format that I know is, and I'm confident works and produces a proper back test, it took me a long time. So what my goal is to have tradable statistics and probabilities for setups. I don't care if I am ever an A+ investor RT code guy, if you know what I mean. So I'm looking to achieve my goal without spending so much time on the coding parts of it. And what I do here with these is the way I do the vetting, which is exactly how it's supposed to be. This is the back test. This is the trading system. Set up a back test. IRT's having a problem with a lot of data, so it doesn't like doing some of this stuff. See how it's not responding? There we go. Set up a back test like this. This is two contracts on the MES and the RTH system. 100 days back, accountability. Okay. Back test. And these are the reports generated, or some of them, for this particular back test. So there's $1,500 on the micros, 172 trades, maximum favorable, maximum adverse excursions, amount of capital used, the net profit, long, short. And this one is another report, which is pretty handy. Total trades, total winners, max winner, average winner, total stops, average stop, 2.41 profit ratio or risk to reward ratio. There's 18 consecutive winners, 4 consecutive stops, etc. This is the same, another one of their reports for, I'm going somewhere with this, so don't stick with me. Each and every trade of 172 trades looking back 100 days. Absolutely time, entry, exit, what entry type, what exit type, and what the running total and the profitability is. There's T1 profit. I don't see any T. Here's one. There's a lot short with a T1 and a T2, all based on how the configuration is over here, which in this case is 2 lots, 16 tick stop, 16 tick T1, 64 tick T2. At 16 ticks, which is T1, it trails to entry. So, and then this would be, come on, this would be the what am I doing here? Yeah, there's 30 seconds. This would be 5-minute chart. This would be the equity curve, which is for some reason not plotting correctly. And then, in order to get the rest of the data I need to take this whole thing over here. Oops, music side. I need to take this over here to this. Each one of these lines is a back test. ES is up here above and MES. Each one of these lines is a back test. So here's here's a back test of the MES with a opening range fence trade. Well, let's look at an IB trade. An IB trade, there's 499 days, 884 trades, 625 winners, losers, average winner, average loser, and win rate, loss rate, scratch, expectancy, risk reward factor, R factor, profit, days, maximum favorable and adverse excursion, consecutive winners and losers, and gross. I can also calculate Sharp and Santino over here. Now this is, in my opinion, and I believe statistically correct, how a back test should be done, and with this data I know that I can lean on these expectancies. So there's how I approach it and how I approach the trading here. Now you have a pretty good background, and that's how I do it. Nothing's discretionary. So there was no signal trade for me today because of now what I'm doing, since I've got a few minutes left here. What I'm doing now is moving to this data system, a data analysis system, which is called Edgeful. I can't go into it. I don't have time to start from the top and drill down, but it suffice to say that based on the amount of in play and then what trade is going to happen first, well, this is the probability of which, depending on whether the IB was formed first or not, or second, what is the probability of trades. So with the ending zone probability calculated, this goes from about 8 to 60. Well, let's just show you that quickly. Maybe I can. Quickly. Hopefully I can be quickly. Yeah. From 8% probability to take the IB high and 83% will take the IB low, depending on where the ending or the closing price is for the opening range itself, which is pretty mind-blowing to me that this is so impactful, but it's data. That's what we get. Pretty amazing, huh? And then the report that was open when I opened this is the retracement, which is that if the initial balance was formed first, and it was, in this case, this is a breakout. In other words, this is the initial balance high breaking out, and this is balance low breaking out. We had an 80% probability that we would retrace to the 25% level of the IB, and 60% probability we would retrace to the 50. So quickly, if I can show you this, see the fastest way to show you. This is the IB for the day. Boom, boom. 25, 50, 75, 1. We break out first. The IB high was put in first. Low was put in second. The IB low was taken out. We have a 50% probability to get here. 80%, I'm sorry, and 50% probability we're going to retrace to here. So this is not any way am I going to take a continuation along off of that. So there you go. Now you know everything I know. Send money. All right, I've got to go pick up the young one, and you, really nice to see you in here, Stephen. And this stream goes every morning from 8 o'clock in the morning, Central Standard Time, until 1500. Cash market, 7 hours. Then recently, like I said, this week I'm doing a short one to analyze the opening range for the Globex, which is from 1700 or 5 o'clock Central Standard Time till about 8 o'clock, which is 2000. That picks up both Asia and Globex. I don't know whether that'll continue, but I have a commitment here in the stream. I will never take a trade off the stream, and they're all live right here in Bookmap. So that's why I'm streaming the Globex thing, because if I see an opportunity and take it, well, then I'd be, breaking my rules. So there you go. All right, I got to go get the gal before I have a Vietnamese tiger tear me apart when I get there. I'll see you in a bit. Thanks for coming by, guys. Well, that was a lot of fun. Maybe not, but I did make it back. Boy, I'll tell you, when it rains out here, down here, wherever the hell I am, it really gets with it. A lot of severe thunderstorms. So what did we do? Well, we damn near got to the 50s. We crossed the 25, though, up to the POCs. And, yeah. Stephen, are you the, if you're still around, and anybody, if, are you the moderator, Stephen, that's been in the TLab for quite a long time? Dallas, I think? Maybe just out of curiosity. That's just happened to cross my mind while I was driving back, trying to keep on the road. Well, I tell you, whew, what a rain. Not that it matters, of course, at all, but just curious. So yeah, here we are. What happened? Well, we got ticked for 0. I don't know how in the Sam Hill that can happen. I've got to look at that code, but yeah, nothing day. So look at this. There's the market on close imbalance. Actually, a reaction today. That's pretty unique. That's how it used to be, but haven't seen that in a long time. Yeah, everything's working okay. All righty. Let's check what that market on close imbalance looks like over here. And somewhere right there is where it'll show up. Hezbollah and Amil movement withdraw from Israel. So we're sell side across the board, but really no volume. We've got 107 million, 440 million, 390 million, and 3 million sell side across all of them. That's peanuts volume, though. I mean, usually we're talking 1 or 2 billion contracts. So yeah, and what's going on in the news here? Dallas Fed chairman, huh? Dallas Fed president, Lori Logan. And Heather Wilson, whoever that is. Well, there you go. What do we got going on in the snooze that I missed? Basant has been doing a lot of talking. Well, that's potential risk that didn't get pulled into the financial juice. Nope. All right. Well, so I'm late I'm late for a very important date, but here we are. So we've crossed the Great Divide for the market on close orders. We had basically a pretty goofy day. Anytime that the range looks like this, that's a pretty tight day, huh? We poked our nose below the IB low a couple of times and skedaddled right back up in here. Now the market on close sell orders has taken it down a little bit, but that's not a lot. Let's look at what we've got for let's look at what we have for reports tomorrow. This is typically what I do. This is my typical daily recap that I usually do at the bottom of the hour. So sorry about that. Tomorrow, what do we have? Initial jobless claims at 7:30. Remember that this is going to be a non-farm payroll Friday. So there's hope for us. Continuing jobless, labor costs, non-farm productivity, and initial jobless claims. This is all in preparation of, drum roll please. Where to go? There we are. Non-farm payrolls, 7:30 in the morning. Friday's going to be a pretty heavy number day. A lot of these not so meaningful as far as market moving, but non-farm payrolls obviously is the biggest event of the calendar, or at least used to be until we started. It's probably been pretty much overshadowed now by tweets. And social media stuff, I guess. So there we have it. That's the market hour. That's the news for tomorrow that will be on our radar. Remember that the stream starts every morning at, this stream starts every morning at 8 Central Standard Time and lasts until 1500, which is the cash close here in a few minutes. I am also doing an abbreviated stream now on the Globex Open at 1700, which is 5 o'clock Central Standard Time, until about 8 o'clock. And that encompasses just because I have a commitment to take no trades off the stream for accountability and transparency. What I'm doing with these Globex and Asia opening range trade possibilities is watching to see if I think there is a good potential for trades in those time frames, and if so, I might take the trade. So I want to have those streams active to fulfill my commitment to only take trades on the stream. So there's that, and it's really important to me to be completely transparent and trade live, real time. I think that's so important. And that's what I'm going to do. So there we go. We're going to have the close here pretty quick. What else should I do? I guess my parting typical my old boomerism here, words from the boomer. Words from the boomer. This is something you need to take on board. You are the most critical tool in your trading office or at your trading desk. We spend all kind of time and money and thought and hours of work on monitors and DPI and 4K, 5K, this and that and something else, and buy this indicator and pay for that mentoring and all these kinds of things. When in reality, your eyes take in all the data, your brain processes that data, and you use that information to make financial decisions that affect you and your family. You really need, the priority needs to be to take care of yourself. Be well rested, be well hydrated, nourished, exercise, fit, get your blood pressure going, get your blood pumping. Not pressure going, but yeah, that helps too. But, we are in, whether you know this or not, we participate in a zero-sum environment. What does that mean? Well, that means that by definition, it's impossible to ever have more sellers than buyers transacting business in futures.
because we trade, think about it, we trade a contract. It requires a seller and a buyer. What does that mean? That means that every time you do all your analysis, you look at all your little squiggly lines or whatever it is you do, and you decide that this thing is going to go from right here to down here, and you sell it, somebody else thinks it's going to go the other way. That's a zero-sum game. For every winner, there's a loser. For every loser, there's a winner. Period. Zero sum. It's not like stock where there's a big pool of, of shares that you can buy or short, and you have to borrow them back and do all this stuff. The reason we don't have to deal with any of that noise and borrowing shares to pay back to, to short and everything is because we deal in contracts and there's a seller and a buyer. There is no physical thing. We're not trading in a bushel baskets of wheat, for example, or barrels of oil or whatever else it is. So the thing you need to remember in a situation like this is every, and this is a saying from Tom and other people, the market goes down to go up and goes up to go down. And that's why. If all these people are shorting here and all excited about everything's going to the bottom, somebody was selling to them. Somebody was buying from all of these short sellers. Now they're down here, and that someone has a bunch of long inventory. And how do they profit from that? The market goes up. The market goes down to go up, goes up to go down. So you can rest assured that the Citadels and the Black Rocks and the Jane Streets of this world are the most well-funded, staffed, manned, fastest connections humanly possible. And their traders are highly paid, super educated, super supported people. And they come to work in the morning with one mission in mind, and that is to be on the winning side of as many trades as they can. They don't care about you, me, or Joe Blow the Ragman. They care about being on the winning side of as many trades as possible. So you better be on your A game when you come into this market. And by all means, if you're on emotional tilt for any reason, throw the mouse in the damn garbage can, or, just sit back and watch, or whatever it is you do, but do not interact until you've realized that Monkey Boy's under control and you've got all your your chemicals are straightened out, and you're off drugs, you're not doing dopamine or adrenaline. And that's really important. Exercise, get away from the screens, take a walk every couple hours in the day. And you don't have to, make an excuse, well, I can't get to the gym, whatever. Step back from your desk and do some body weight squats. Do 100 of them, sets of 25. For $25 or $30, you can get a chin-up bar rig that hangs in your doorway. You know what I mean? That's what I've got in here, and dumbbells over there. Because I end up standing here at least 12 hours a day. So yeah, I hear you about the get to the gym thing, but it's important. So do that, and that's the boomerism for the day. And I'll put my soapbox back into the desk now. So have a great day. We are now closed for the cash close. I'm going to shut this thing down and get the stream ready for 5 o'clock tonight for the Globex stream. And then be sure you like and subscribe and put a little bell thingy or whatever it is so that you get notified every trading day at 8 o'clock in the morning. Thanks a lot. I really, really appreciate you coming by and interacting in the chat. That's really a great deal. And it has already proven to be a positive learning experience for me, for sure. So have a good one. And let me get that going, and I'll see you in about 2 hours on the Globex stream or at 8 o'clock in the morning tomorrow morning.